Hi guys, here's Hustle Hub. Today we're going to talk about hedge funds. Hedge funds are a kind of investment fund handled by a professional asset management company. Their goal is to produce returns on investments in the long term. Most of them have the role to produce these returns in an uncorrelated way compared to the market. That's because the fund's underwriters, mainly institutional investors or wealthy individuals in a smaller part, already have a strong correlation with the indexes that we all know, like the Nasdaq, New York Stock Exchange, Dow Jones, etc. Under US jurisdiction, the capital managed by the fund can be smaller than $1 million, and the underwriters can't be more than 99. There is a reason for this, because private individuals can't afford to have large sums of their wealth in such risky and volatile investments. They can also use leverage, which means that they borrow money from other financial intermediaries, like banks, so that they can increase their profits on the trades they make. They trade liquid assets like stocks, bonds, and derivatives, which makes them different from private equity funds. We already covered what a private equity is and why it made so many billionaires in the last few years, so make sure to check it out. The investment strategies applied by these funds are often hard to comprehend for the non-professional investors, but they can be categorized in 6 main strategies. The first one is market neutral, which means that they have an equal amount of long and short positions. And we remember that long positions make us money when the asset that we trade appreciates, while short positions make us money when the asset traded depreciates. The second strategy is event-driven, which means that the fund makes trades based on events they think will happen. For example, if you knew that people staying home during lockdowns would have switched from sports betting to trading stocks, you would have bought shares of companies like Charles Schwab, Interactive Brokers, etc. The third one is distressed securities. When the market thinks that a certain will perform badly or even default, the value will drop. But some hedge funds, when they think the overall market is wrong, confident in their research, can buy these assets for a bargain and make stellar returns on investment. Other funds have enough strength to push the issuer to pay even though they are about to default. This was the case of the Elliott Fund, managed by billionaire Paul Singer, that we have already covered, so make sure to check it out. It happened that they pushed the Argentinian government to pay back their bonds even though they defaulted. Another strategy is equity long net exposure. These are funds that have most of their capital invested in long positions, but they can also have smaller short positions. There are also funds that have a net short position, but these are very few. One notorious net short hedge fund manager is Jim Chanos. Then we have global asset allocators. These are funds that are invested in different areas of the world, not just in a particular country or area. The last one is active investment strategy. These are hedge funds that want nothing but controlling stakes in companies so that they can nominate board members and shift the company's direction. They do so in order to bring changes that they think will make the stock of the company appreciate. This can be a change of corporate strategy, or just push the management to buy back stocks. So these are the cardinal strategies used by hedge funds. One strategy doesn't exclude the other. Of course, you can be a net long event-driven investor, for example, or an active global asset allocator, and so on. These funds don't have to comply to as much regulation as the other financial intermediaries like banks, insurance companies, pension funds, etc. But the regulation became more strict after the 2008 crisis. Thank you guys for watching the video, and remember to give us all your support by subscribing to the channel, smashing the like button and turning on the notification bell. See you next time with another video for you. This is Hustle Hub.